Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. Just my opinions, thoughts on the market. Let's get into today's action. So, first, the economic data. I miss Tuesdays. So I am, let's see, today's the second. So let's go over that. Of course, I don't think it's as that important, but S&P Global Manufacturing 50.2. So above consensus, it is expanding now. But if you look at the ISM Manufacturing PMI, that is in contraction. And if you look at the ISM Manufacturing, this is more of a US centric, so business inventories, among others. So you can see US activity. So US manufacturing is not expanding. But job openings, those were less than expected. So that's actually another bad. So even though the global was increasing, US and then job openings, but construction spending that was increased above expectation 7% and 3%. Jolts, which are the job quits, those are less than expected. The market views that as bad. I view that as good because that means a lot less people are fired. Some of these quits or resigns are more of a disguise. And what it means is either fire or resign. So they count as quits, and that's the market gets wrong. Uh, High quit rate should actually be a bad thing. It should be counted like layoffs. And a low quit rate, but the market views this as bad because what they say is that in a booming economy, you're more likely to quit your job and either start a business or go somewhere else. You have more confidence you'll get another job, which I don't believe. Most people, they don't quit their job until they have another job lined up. So then the Dallas Services Index, that's negative 11.3. So this was, mixed to bad. So more closely to bad. But if you actually look at today's data, ADP employment, private sector, higher than expected. So total vehicle sales, that was good. That was higher than expected, the consensus. So this is the last 2 days has been mixed data. Tuesday was mixed to bad, but this was actually, I would say, good solid data. If you look at it, mortgage rates 6.7, those are down, but mortgage applications were in contraction. So refi index, less people refinancing. So, but you can tell the market's been bad because a lot of these companies aren't doing well. And I'll just give you an example of a couple too. I'm going to do. First, Hooters files for bankruptcy. Now, this is Chapter 11. It's a restructuring, but here's the thing. When you're filing for bankruptcy, that means someone's losing money. That means someone's losing assets. Someone is not, so someone has to report losses because they invested and their investment went bankrupt. So that is a bad, someone's losing money on, like, for example, let's say they decide to close down a couple of stores. Well, they were leasing those stores. Someone no longer has someone to pay them rent. So yeah, sell 100 company-owned restaurants to two. So yeah, that's what they say. They say let's see. Yeah, see, look, closed hundreds, dozens of restaurants last year, blaming rising food and labor costs. So I would say the real reason is rising food costs. People can't afford to eat out, so what do? They go home. So they put their spin. It will continue business as usual. but they're evaluating the company's operational footprint. So, so yeah, that's how it is. They're restructuring. That means someone's losing. They're getting rid of it. So here's another one. I mean, this is they blame the Musk boycott is Tesla sales plunge after the Elon Musk backlash. But the truth is, generally speaking, in America, boycotts are are successful only when they're done against subpar products. Let's be honest. Tesla's not a great product. It's overpriced. Most of their cars that cost 100,000 should really be costing like 30 or 40K. Cars they sell for 60 or 70 should really be like 20K. They should not be that much. This is an overpriced product. And a lot of people decided, you know what? This is a way of me, protesting. It's voting with your money. And that's what a lot of people have been doing. They're voting with their dollar. And, like, for example, how many people boycott chicken wings? How many people boycott? I mean, I remember there was this one Trump supporting bean, Goya beans, which is very good. No one boycotted that. Uh, Arizona tea. If you don't remember the Arizona immigration law, I forget what Sheriff Joe. I forget his name, but they won the. But Arizona tea is a really good product. It's hard to boycott. So the successful boycotts like Bud Light are with subpar products. Tesla's the Bud Light of cars, so you can do without it. It's not really that good, and there are always alternatives. So yeah, overpriced cars. Yeah, that's what it is. So anyway, yeah, that goes to show. But Tesla's an American company, so and it was big market cap and everything. So sales are tanking, and guess what? They're not coming back. That's just the truth. Uh, Here's the other one. Bitcoin is now the dollar. Trump launches USD1 stablecoin, backed by treasuries and the dollar. For all of those that said, Bitcoin's alternative, it's whatever, just admit you're wrong. This is literally backed by the dollar, backed by a treasury. It's not an alternative to the dollar. Bitcoin is the dollar. And that's just the truth. I think Bitcoin's actually doing well I think the bull market is probably over. It's down today, 587. Let's look at a 5 day. It's up 140. 1 month, still down on the last month. 6 months. I mean, yeah, it's going to be, I'd like to see post-election bounce. What's it? Year to date, it's down 8,800, more than that. So we'll see what happens. I mean, it could go back up or what. I think rallies, just my opinion, not financial advice, but I think rallies are a selling opportunity and not a buying opportunity, or at least a hedging, depending on how much you have. Sometimes it's hard to lock, but if you can get a hedge, if you know how to, but that's my opinion. I think the bull market that probably began in '09 is over. And if it's not over, I think it's almost over, but we'll see. Uh, Bitcoin, we don't have to. Oh yeah, we're done the stablecoin. We talked about how. The market today. I'm gonna go to the S&P. As you know, my mind is really. Let's do a 5 day. Let's see, where is today's date? So it started the 31st, so 28th. So yeah, the market's really been going up this week. If you look at started here. And as I said, it's due for a bounce, not all. It's actually up. Wow. It finished up today, but in after hours, it's down because of the tariffs. But I don't think the tariffs are all that uh damaging. But I mean, I think the stock market, the bull market that began in '09 is basically over. And if it's not over, it's almost over, and I'll probably have one more upswing, but I think rallies are selling opportunities. My opinion, not financial advice. Now, gold, I think, is coming near a top, but I don't think this is the top, meaning it's over. I think there's one more upswing in gold. If you look at gold today was up, but markets end in euphoria. And if you want proof that there's just not much euphoria in this market, uh, look at it. The miners, this is 45. Gold was at 1900. This was at 62. So, and this is at 43. So that's almost 20 points. And and seniors are the ones that go first. That's why I think seniors have been really outperforming. If you look at it, I've been doing pretty well with my mining stocks, but a lot of people are underperforming the Huey and the GDX. And I would say the main reason, I wish I would show holdings. There was actually holdings, but if you look at it, a lot of these, let's look at the Huey. Oh, good. Let's see if they actually have that. Yahoo Finance changed it, but one thing I liked about this, let's see if they do components, is they would, and if you look at it, top 14, so they have like Goldfields, Harmony, IU, New Gold, but Anglo Eagle, Newmont, Barrick, like these are all seniors. So a lot of people will not be outperforming because the junior and the mid tiers, with the exception of New Gold, they are the ones, they actually underperform in the beginning. And then the mid tiers in the middle of it, they perform well. And then at the end, the juniors. So a lot of gold fund managers initially, and you don't see a lot of gold fund managers really outperforming the Huey, the index. And like, yeah, look at the Huey. If you look at it, this is at 361, and this was at 591, 588 during the last bull market. If you look at it, it's nowhere even near close to here. So I would say, yeah, this is definitely, in my opinion, it's not the top, but it is beating its 2016 high. It's 2020, it's right where it is. I think this is sort of more of a breakout. But yeah, I think it's sort of, and if you look at it, the Huey is only up 126 on a day where gold was, let's see if Seeking Alpha. If you look at a day that gold was, let's see, where is, they used to have really good. Yeah, gold was up $15 and the Huey was only 0.51, but meanwhile the Huey 0.35. The miners, generally during euphoria, the miners really outperform gold in a euphoric stage. So yeah, that's all I have today. Bitcoin is the dollar now. So remember, thanks for watching. If you watched all the way through, really helps the algorithm. Hit that like button, subscribe, and just remember the disclaimer, not financial investment advice. I will see you next video.